Strategy's main goal now is to get stretch back to 100, and it hasn't even achieved that. The yield right now is 12.7%. They're going to have to jack it up again because they're not getting it up to 100. And if they haven't gotten it up to 100 yet, what does that mean? They got to sell more Bitcoin. They got to sell more common stock. That's bad news for common stock. That's bad news for Bitcoin. Really, I don't know what's holding Bitcoin up. I think it should have dropped a lot more by now. Now, it's not rallying. And I think a lot of people are interpreting this to mean that it's getting ready for a big move up. I saw on X, somebody pointed out that Paul Tudor Jones had about a $20 million position at Bitcoin ETF. And they said, oh, you see, look, this really smart guy has got Bitcoin. See, this is a good indication. Yeah, he manages over $100 billion. So if he has 0.2% of his portfolio in Bitcoin, that's hardly a high conviction trade. I mean, he barely owns it. Looking at what happened in the rest of the markets. So as I said, bonds went down, yields went up, but it didn't stop the stock market. Although the Dow Jones was down a bit on the week. The Dow was down 0.4%. S&P 500, as I said, new record high, rose about 0.5% on the week. The NASDAQ also had a positive week, led by the rebound in the AI names. Tech stocks that had been beaten down have come roaring back in the last week or so, up just under 0.5%. The small caps, they had a good week. Russell 2000, 1.3% on the week. But I think the best performers, again, for the second week in a row, were precious metals. Now, gold itself only up about 1%, closed at $4,375 an ounce. Intra-week, we did trade above 4,400. So that's over 10% move from 4,000 support. Silver also rose just over 1% on the week, closed at $64.58. But intra-week, silver traded above $66 on Thursday and on Friday, actually. So closed well off its highs, but still a positive close on the week. And the mining stocks, more gains. The GDX up 1.8%. But what's significant is that it didn't pull back at all after being up 22% last week. So we added another 1.8%. GDXJ, same thing, up 1.6% on the week following last week's 25% rise in the GDXJ. Now, I mentioned last week, Bitcoin went up, but not nearly as much as gold or silver or the mining stocks. But instead of adding to its nominal gains or minimal gains last week, Bitcoin almost gave up all of its gains. It fell 2.7% on the week. Bitcoin, as I'm recording this on Saturday night, I think Bitcoin's just about exactly 63,000. But it couldn't even follow through with back-to-back gains. That's how weak Bitcoin is. And strategy stock was down 5.7% on the week. So even though the NASDAQ was up, even though gold was up, gold stocks were up, strategy was down almost 6%. That's a pretty big drop. Even Stretch, which is the preferred that strategy has been buying back. They've been issuing common, selling Bitcoin to buy back Stretch. And even Stretch was down on the week, closed at 94.78. Can't even close above 95. Remember, strategy's main goal now is to get Stretch back to 100. And it hasn't even achieved that. The yield right now is 12.7%. They're going to have to jack it up again because they're not getting it up to 100. And if they haven't gotten it up to 100 yet, what does that mean? They got to sell more Bitcoin. They got to sell more common stock. That's bad news for common stock. That's bad news for Bitcoin. Really, I don't know what's holding Bitcoin up. I think it should have dropped a lot more by now. Now, it's not rallying. And I think a lot of people are interpreting this to mean that it's getting ready for a big move up. I saw on X, somebody pointed out that Paul Tudor Jones had about a $20 million position at Bitcoin ETF. And they said, oh, you see, look, this really smart guy has got Bitcoin. See, this is a good indication. Yeah, he manages over $100 billion. So if he has 0.2% of his portfolio in Bitcoin, that's hardly a high conviction trade. I mean, he barely owns it. It's an afterthought. I mean, you should look at the position that Tudor Jones has in gold and silver and mining stocks. So, I mean, the fact that he has tiny exposure to Bitcoin is actually more bearish because he's one of the most bullish guys out there in the hedge fund community. He's the one that came out with Bitcoin as the fastest horse in the race, yet he has a tiny, tiny position in Bitcoin. So if even the most bullish of the hedge fund managers barely owns any Bitcoin, I don't see how they were spinning this into good news. And I'm going to continue to advise the people who are watching my podcast, if you've got Bitcoin, you got to get off of that horse. You got to get on to gold and silver, or even just buy tech stocks, buy AI stocks. If you want to speculate, buy those. Bitcoin is dead money. And it's probably worse than dead money because dead money is just maybe going sideways. Your money is going to die, literally, if you leave it there. You've got this lull before the next storm. But while everybody is waiting for a big rise, the market's far more likely to drop. And I think once we crack the lows are around 58,000 or something like that, or a little bit below that. I think it's going to be a quick move down to 50,000. And if it cracks that, 25, 30,000, 20,000, I mean, you could be there very, very quick. And then you're going to start to trigger all kinds of selling when you get that kind of decline in the price. And again, as I mentioned on my podcast last week, it's been brought to my attention that hardly any of the ETF holders have thrown in the towel. Only maybe 10% redemptions. And just because they've been able to hold on for a 50% decline doesn't mean they're going to stay with it for a 60, 70, 80% decline. At some point, they're going to cry uncle here, and they're going to give up on this losing trade, and they're going to take their chips to another casino. So that is all coming up. Now, also, too, on the Iran news, which I spoke quite a bit about on my last podcast, but it really seems that we're moving away from the military confrontation. Even though we're moving another aircraft carrier out of Asia, I think that's our last one, and bringing it over to the Gulf. But we seem to be focusing now on economic sanctions. I read a post from Trump, and I was listening to Scott Bessent, and they're now talking about these economic sanctions that are supposed to hit this week. But they're supposedly going to be the most aggressive sanctions ever applied to any country in the history of the world. So we're not going to bomb them back to the Stone Age. We're going to sanction them back to the Stone Age. Right? These are going to be not just your run-of-the-mill economic sanctions. No, we're going to hit them with the hardest sanctions that have ever been hit on any country. This is, I guess, the way the rhetoric goes. I have no idea what these sanctions are going to be, because we've been sanctioning Iran already for a long time, and it hasn't seemed to have achieved the objectives that we want. So I'm not really sure how these new sanctions are going to be so much worse, so much more draconian than the sanctions we had before, but we'll see. But what's probably the most ridiculous part about this, and I was watching this speech Trump gave, I think it was on Friday. One of the things he's saying now, he's conceding that oil prices are higher. But he's saying, look, it's okay if we have to pay slightly higher oil prices or gas prices. And if it was only slightly, I guess it wouldn't be that big a deal. It's not slight. I mean, these are significant increases, and it's going to keep on happening. It's not like the increases are over. Oil, I think, is going a lot higher. In fact, oil was up on the week. I think about 6%. We're back over 80. I think we closed at $82.40. We're going higher. And it's going to be a lot more than a little bit. But Trump is saying that this is all worth it. It's worth it to finally confront Iran. And if we have to pay higher oil prices, well, it's money well spent. But the most ridiculous comments that he's making, and it kind of reminds me of Baghdad Bob with Iraq, not Iran, where we had all of our troops in Iraq and all of our tanks. And this guy was saying that Iraq was winning and everything was great, and it was obvious that he was losing. Well, it seems like Trump is as clueless as Baghdad Bob when it comes to the Strait of Hormuz, because he keeps saying that we're in complete control of that strait. Right? That everything is great, everything is going according to plan. We have 100% control. We own the strait. In fact, I don't know if he was joking or not. He wants to make it a U.S. territory, right? Just the strait is going to be a territory, like Guam or Puerto Rico or something like that. But he says we got complete control of it. Well, if we had complete control of it, all these ships would be going through it. They're not. There are barely any ships that are going through the Gulf. Now, if you believe Trump, the reason that ships are not going through the Gulf is because we won't let them. Because obviously, if we have complete control of the Strait of Hormuz and barely any ships are going through, it must be because we don't want any ships to go through because we're in complete control, which is nonsense. We are not in complete control. If we were, then all the ships would be going through, and oil and fertilizer and everything would be moving along the way they were a year ago. The fact that barely any ships are moving through that strait is proof that we don't have control over it at all. I mean, we may have a blockade, we may be able to help prevent ships from going through, but what we want is to allow more ships to go through, and we can't do that because Iran is controlling that. But for some reason, President Trump doesn't understand that. Anyway, before I move on to the rest of the podcast, because what I want to discuss is I put out a redo of the video I did 5 years ago, because today is the 55-year, again, I hate to say anniversary because, that's like a good thing, but it's been 55 years since Richard Nixon took the U.S. off the gold standard. And 5 years ago, during the COVID lockdowns, and, it's kind of amazing how time flies. It's already been 5 years since these lockdowns. But in 2021, on this same day in 2021, I was locked down in Puerto Rico at my house, and we produced a video, Nixon 50, to highlight the 50 years since leaving the gold standard. Well, today I kind of redid that same video for 55 years. So I slightly tweaked it a little bit. I noticed that when I did the first one, the national debt was a lot lower than the 39 trillion that it is right now. But also what was very interesting about my first video is back then, the Federal Reserve was still clinging to the idea that inflation was transitory. Right? This is before any rate hikes had happened, but inflation was picking up. And in that video, I was talking about how much higher inflation was about to go because the Fed was completely wrong in its transitory narrative. And of course, now, 5 years later, that video was very prescient when it comes to the fact that the Fed got the transitory narrative wrong. That was just an excuse not to raise rates. And again, shortly thereafter, I even did that video, they were still talking about inflation averaging. They were still talking about how they want to let inflation run hot, a little bit above 2%, to make up for all the years that we were below 2%. We now have been well above 2% for 65 months. In fact, we've been an average of 4%. That's been the average CPI increase. The actual inflation rate, of course, is much higher than that. But it's 4% a year for 65 months. That means if we were still going to follow inflation averaging, which the Fed has jettisoned that whole idea, but if we were going to be consistent and try to get inflation to average 2%, we need to have 0% inflation for the next 65 months to get the average to be 2%. Of course, we're not going to get anywhere near zero. We won't even get anywhere near 2. We won't even be 4. We're going to average up that 4% inflation.